it's Alina Allward with Allward and Associates Real Estate. Wanted to give you a quick update about what's happening in the real estate market, and we'll get right to it. We were really hoping to see some relief from the low inventory levels that we saw in January, but instead we actually saw the problem get a little bit worse. We have about 18% less inventory in February than we did in January. Right now, we're just at about 370 active properties on the market. That's less than 2 weeks of inventory on the market. Now, if you contrast that to the amount of properties that we have pending right now, which is about 1,800, we've got about 4.5 times more pending properties than we do properties that are on the market. And that indicates that we have a much higher buyer demand than we do supply. Now, what that's doing and has been doing over the past few months is making our prices go higher and increasing our prices. So our median home price right now, median active list price right now is $440,000, whereas last year it was about $400,000 this time last year. And so we're seeing about a 9–10% increase year over year in prices right now. And so a lot of that is being caused by this very, very low inventory, much higher demand than we're seeing supply. When properties are getting listed, what we're seeing is a lot of multiple offers. We're seeing properties off the market within days, and things go pending very quickly. In fact, right now we're at 5 median days on market, whereas it used to be 9 in January, just a little over a month ago. So things are selling quicker, there's less inventory. We're continuing to see essentially this inventory shortage get worse essentially. So as we go into spring, this is normally the time we start seeing a lot of inventory come in the market, and hopefully as the next couple of months come about, we'll see that, and we'll definitely keep you posted on that. One of the things that we have been keeping an eye on is interest rates, and wondering if that's going to cause a slowdown in our market or how that's going to affect our market. And really at this point, we're not seeing a huge effect on our market from those rising interest rates. And it's been a significant hike in interest rates. I mean, historically, they're still very low interest rates, and we understand that. But this time last month, we were somewhere around 2.5, 2.75, under the 3% mark interest rate. And now we're somewhere in that 3.5% range. So that's a pretty significant jump in just a few weeks. But again, we just haven't really seen a huge impact on our market. It doesn't really seem to be preventing buyers from going out and purchasing. So we'll definitely keep you guys posted as the market progresses. We know that we're in a very fast changing market right now. And if you have any questions about buying or selling in today's market, feel free to reach out and I'd be happy to help.